Morning, everybody. Hey, first things first, I wanted to start by apologizing to all of you who got an email from me this morning that you were not expecting and may not have been super relevant to you. I was going a little faster than I should have in sending out updates this morning and sent out an email that was supposed to be this information all about variable rates to our variable rate clients. Well, I sent it to everybody. Now, having said that, I hate spam email probably more than anybody else out there does. So I am sorry. I did not mean to do that. And for anybody who did get it, consider it a nice reminder to stay in touch, an easy way for me to say hi, and I'll call it a mistake that's easy enough to fix. But anyway, what I wanted to update everybody on this morning is obviously interest rates. We're back doing this again. This is not the first time this year, and probably not the last for whatever that's worth. But I mostly wanted to talk about, what's happened, why it's happening this way, what we're expecting from here, so that those of you who are still with me, team variable, sticking around, and are riding this out, know what to expect over the next couple of months. So first things first, there's good and bad news in all of this. Anytime we have an interest rate increase, well, I always look for a silver lining, but there's some bad in it as well. The good news is we were really honestly expecting today's hike to be 0.75%. Everything we knew, the markets, all of the information that was out there in the world is telling us 0.75 was pretty much inevitable. And yet we woke up to this morning to the surprise that it's only 0.5%. I mean, we say that, 0.5% 6 months ago sounded like it was, wild and unheard of, but that 0.5% change was less than we were anticipating. So that's a good thing. That's the positive news in what's going on right now. The bad news, bottom line is this costs more money for those of us who are sticking it out in variable rate mortgages. On average, $400,000 mortgage, this works out to a difference of about $100 a month. So it's not a small change. I wouldn't downplay that and say that that's a small amount of money, but it's not massive, and it's part of what we've been anticipating this year and sort of been part of the plan as we've gone through 2022. That's not to say that any of this could have been predicted by anybody a year or a year and a half ago, but this is right in line with what we've been predicting for a few months now. Now, a lot of people are obviously asking the question, when does this end? How do we get off the ride? How do we stop the roller coaster? It's coming. And really the end result in what's happening right now and what's coming probably in the next year of our lives is that it is very, very likely, and more so by the day, that we're going to wind up in a recession. A lot of the reporting right now is talking about some pretty massive job losses. I just read a report this morning that was saying that Canada's lost 100,000 jobs in the last 4 months. Last time something like that happened was the last serious big recession. We're talking 2008. So it's been a long time since the economy's lost that many jobs that quickly. Pretty good warning sign that some things are about to get tough for a lot of people. On top of the fact that we've got higher interest rates, higher cost of borrowing for so many different people and businesses right now. So my own expectation, based on everything they're telling us, and based on what we can see right now, is sometime in the next year of our lives, we're going to start to see those warning bells going off in the news. We're going to have our government actually come right out and say we are officially in a recession. It's 2 quarters of negative growth back to back is sort of the technical thing that they're looking for. But what it means to us is bad times. Things are not only a lot more expensive than they once were not that long ago, but for many people, this is going to mean a slowdown. It's going to mean our businesses maybe get slower. It's going to mean that work could slow down for some of us, or worse yet, some people are going to lose their jobs. When we get there, where I'm going with all of this is that when that outcome happens, and it's going to, it's not if, it's when, one of the only tools we have to fix it is interest rates. The Bank of Canada is going to eventually see that they've hit the peak and probably gone too far, and that they're going to have to reduce rates to get us back in line with normal expectations and what they want the economy to be doing. There's always going to be some unexpected stuff that pops up that changes, the best laid plans or the best predictions we can make. But if things go the way that they historically have, then we're going to hit the end of this rate hike cycle, and we're going to start to come down the other side and be lowering interest rates to resolve the recession and the slow economic times that come out of this. So, my easy advice for anybody that's comfortable sticking it out, a lot of people have asked me, am I still pro variable rate? Am I sticking it out? Yes, I take my own medicine. My mortgage is variable and I'm not changing it. I have faith. I have faith that history repeats itself. I have faith that I am comfortable riding out this wave that we're in and getting to the end of the next year, the end of this rate cycle, and waiting for rates to come down again, because that's when I'm going to hopefully save as somebody who's in a variable. I can't jump out now. We're at the top of the ride. If I jump out now, I've jumped out when rates are at their highs. I want to wait for us to come back down again to really see that I'm actually saving money here. So one of the most important things that I'm going to follow that by saying is continuing to stick it out in the variable rate, in my opinion, makes a lot of sense if you've got a good, stable job. Talking about the economy, talking about recession, all of these things are going to come into play. And for anybody out there who's a little on the fence or not quite sure what's happening with work in the next year or two of your lives, yeah, this may not be the time to take a big gamble if you're not sure about your income situation. Second considerations are, do you feel like you've got a good rainy day fund? Do you have some savings in the bank? If so, if you're in a good position and you have the ability to ride out where your payments are at now for a little bit longer, I do think this is going to pay off. Now, if anybody out there is concerned, whether it's about the mortgage or if it's about some of the other payments in your life, for a lot of people, we got stuff besides just the house, car payments, credit cards, lines of credit, that sort of stuff. If anybody out there is concerned about your total amount of cash going out, let's talk about it. It might not be just the mortgage. We might look at refinancing. We might look at consolidating some of that debt. We might just look at the budget, talk a little bit about, what's happening month to month and where that money's going to so that we can help you plan to get through this. In a lot of cases, that's still going to be me saying, yes, I think variable is still the right move for you, and here's why. But there are going to be those ones where it makes sense to get off the ride now, lock that rate in, even if rates are high right now, in order to get rid of some of those other payments and make sure that you're going to be okay getting through these next couple of years. Now, as I always say, if anybody ever wants to chat, if you want to talk through any of this and get some advice specific to your situation, reach out, shoot me an email, give me a call. I'm always happy to chat. And hopefully nobody out there's panicking too badly or worried too much about what's going on right now. This really is all part of what we're expecting to happen. Things are going the way that they normally do, and we can expect an outcome, that's historically accurate and sort of true to what's happened in the past. But yeah, I'm always happy to make time. Thanks everybody for listening to me, and I'll talk to all of you soon.